TJ, the Wheel Deal, coming at you live with another episode of Talking Options with Option himself. How's it going, my man?
Hey, what's going on? How you doing, bro?
I'm good, brother. Cannot thank you enough for encouraging me to take the leap of faith and going over to Tasty Trade, because the more time that I spend on the platform, the less intimidating that it is for me. And it's like my eyes have slowed down. Like, have you ever played sports and the game felt really fast? Kind of like your son plays football, right? He's about to go play college ball. And when he was in the Pee-wees and coming up, Pop Warner and whatnot, the game was probably very fast for him because there's a lot of moving parts, right?
Yeah.
But as you get seasoned, the game slows down a little bit in your mind. And then you're just reacting and stuff because you know what to expect, and you're not like playing scared or anything like that. And that's when you can excel at a sport, right? So I feel like that's kind of the way the platform is for me. Like, it's slowing down. Like, it was real busy initially, but now it's like I'm pushing the same buttons over and over, so it just becomes very mechanical.
Yeah.
But bro, I appreciate all of the insight that the platform gives me that I just didn't have on Robinhood, dude. And it's no knock on Robinhood. It's just not designed that way yet. Maybe one day it will be. Maybe that's what Robinhood Legend is going to be. But right now, it is just not the case. And dude, it's kind of like I just got the Tesla. When I first got the Tesla, bro, I was afraid to push buttons on that screen because I thought I was going to break my car. And now it's like I see, like it's like when you get an iPhone, you mess with it a little bit more, you get more comfortable, right? And man, super excited about it. Anyway, I want to hit them with the portfolio update, and then I want you to look at the Greeks, but from more of a macro perspective with the total positions that I have going on.
Okay.
And then you can just kind of like offer me some insight, because there's some differences, because we're going to be able to feature 3 portfolios now. It's all, it's all under the same umbrella. Again, this is something that Robinhood was just not able to do for us.
Okay.
And we petitioned for this for a while. I was like, I don't need to have multiple logins. This is the family structure. This is how it all works. This is our corporate structure. They were not interested. And that's okay. We'll find somebody who is, right?
Yeah.
It's like, I wanted to get married. I need to find somebody who wanted to marry me too. Like, I can't just go put an ad. You know what I'm saying? Like, you gotta find somebody that likes you back, and then you make life work. That's how it works. So anyway, let me go over here. You see the kaleidoscope action?
Yeah.
Okay, awesome. You able to see the Tasty Trade?
Yep.
Okay, awesome. So I've got it set up on the little account. This was the 50,000. It's actually 52,000. I just sent another 2,000. My dad gave me 3,000, and he was like, "Hey, buy me some of that Bitcoin company."
Okay.
So there's there's only 2,000. I haven't sent the last 1,000 yet.
Okay.
But there's some shares of Riot that I own, and those are actually my dad's.
Okay. Yeah.
those are my those are my daddy's shares, if you will. He wants to use the money to go to Vegas.
Hey, nothing wrong with that.
75 in September.
Okay.
And he's like, put me in a stock he thinks gonna do well, mijo. If it doesn't work out, we're already gambling anyway. You know what I mean?
Yeah.
So I looked, and I was like, I think Riot's the one, Pop. Like, I think that this is the one where we can get 500 shares, 600 shares, or whatever, and see what happens. But anyway, let me just walk you through these positions, and then what I really want to focus on is on the very top, where I have highlighted is the delta, the theta, the vega, and the extrinsic value of this particular account in general after I did the portfolio update. Fair enough?
Okay.
So I'm going to minimize all of this. That way it doesn't look so busy. And then we're going to start with one at a time. So we got Clean Spark here. So there's options with the roll. So these all expire on April the 17th. So it's 10 contracts at $8 and at $10. So the 34-day, guys, that's just 34 days to expiration. The extrinsic value is right there. That's the EXT. The trade price is what I collected. The mark is what I would have to give back right now if I wanted to get out of this position. You see the P&L for the day, and then the P&L open for the entire position. Been in this trade for 7 days. There's still 34 days to expiration. Then here it just tells you if there's next dividend date or the earnings date. And then it also gives you the profit and loss year to date on this particular position. There's just a lot of metrics coming at you. So it appears very busy on the surface, but whenever you slow it down, you slow your eyes down, and you just start reading from left to right, you'll see that a lot of that information is very, very vital and pertinent for your success. Like, you want to know how long you've been in the trade. You want to know what you're up to date, what you're up in total, how many days to expiration. Like, all of this stuff is something that is vital to you, and also the extrinsic value. That's important as well. And then on top of that, if you hit trade, and then you see the little dot right there, that dot is basically saying you have some positions there. So you open that, and then the most important metric that I always look for here is that copper strip option, because that's the expected move for that cycle. And I'm like, okay, so I see the cash secured puts at 10, at 8, they're in that range. The cash secured puts at 10, no bueno, right? And then we got that $10 covered call. That's a $12 covered call, way out of the money. So I just looking at it, and I'm like, I'm feeling pretty safe there. It looks like I'll definitely have to take ownership of those cash secured puts at 10 if I decide not to roll them. So that little metric there, that copper strip, is very invaluable. How do you feel about that copper strip? Is that one of your go-to moves as well, option?
Always. I always start my position off depending on, what I'm in. I automatically just go to the expected move and sell. So it takes a whole lot of the thought out of it. I just automatically go there and sell.
It really, really does.
But okay, let me give you another metric as well.
Sure.
I want you to pull out that where where the account is, but that little drop out, that pull out box to your right, all the way to your right, where to pull out that other box. No, not that one, the other one. Yeah, pull that out. Okay. Come down to order chain again. Let me show you. Oh, you already there. What I want you to do is for that 10 call.
Yeah.
Where is it?
Right here. No, this is the put, the 10 put.
Where's no, I'm talking about the 12 call. Right there. Go
right
up.
Here in the middle. Right here in the middle.
All right. But you see where it says the 34-day 12 call? No, go up one more.
Right here.
I want you to right click on that.
Okay.
Then I want you to come all the way down to view market state snapshot.
Okay.
Now what that metric shows you, and then I want you to change that drop down from underlying price to IV ring.
Okay.
Now what that metric shows you is if you just hover above the first one that's up to 20.5,
yeah.
The next, and it's going to open up and it's going to say on 3/3, and that's the time that you put that trade on. Right. So you put it on that day, and if you come down to the other one, 307, I guess you probably put on another one. You can see where your IV rank was at the time you put those positions on. So if
it climbed down a little bit.
Yeah. If you at 20 when you put it on 3/3, and you look at your IV rank now of 10.
Yeah, it's 20.6, and now it's 19.3.
No, but look what your IV rank is now up at there on the platform. 10.9.
Right.
So that's letting you know that you done had a contraction, right?
Right.
In the volatility of that position. So, in most instances, you will want to do something with that, right? Because you put it on when the IV was high. Now it came down. What's the only thing else that can happen? If it goes back up, then that means your option price is going to be more expensive, and it's going to kind of go against you because you're short, But that's just another metric that you can look at, and it's a whole lot of other things on there, which is data, the price at the time, things like that. That could kind of give you a little insight on what your position was when you put it on and where it's at now.
Yeah, I like it. There's a lot to unfold.
Yeah,
there's a lot to unfold. So I'm just kind of like taking it in steps. I'm not going over here crazy. and playing with all of these other strategies or anything yet either. 'Cause I'm just trying to keep life simple right now. But Neo, there was some stuff that happened with Neo. Remember, I had 2,000 shares.
Mm-hmm.
I don't have those anymore. So here, if we look at all the, so I just go here to Neo. This is the thing I do love. What's up?
No, go back there to the positions again. Let me see something to where you was at. Because you said you didn't have them. Click back. No, yeah.
I got it right here. So remember, I used to have 2,000 shares of Neo. I sold those for a profit.
Oh, you got rid of them.
Yeah.
Oh, okay.
Yeah, because my dad wanted to buy the Bitcoin shares, and I didn't have the money in the account to do that. So I sacrificed those shares of Neo to get him those shares while the money was in transit. And I was like, well, this plays there again because I sold them at. It'll tell you here because I just go to the activity, right? So I go to the activity of it'll tell me where I sold them. There we go. So to close 473. So I'm kind of like right there. You know, it's a little bit more expensive now, so I wouldn't do that. But here, if I go here to history, what I really love about this thing is I just type in Neo, and then here I have on the filter, I have it just on option. But if I have it on any, well, let me go here with Neo though. Hold on, Neo NIO. It tells me all of the activity with that one. So this is like the wheel tracker already. And here it shows that I bought these shares over here. You know, I bought these shares for 436 and 456, like right here. I bought them for 436 and 456. And then I turned around and I sold them for 473. So everybody can deduce that I made a little bit of money there, right? Yeah. I mean, it's very straightforward. And then here it gives you all of the metrics. Like if I look at any, it's going to show that I'm positive 534, right? Yep. But if I go to option, it's going to show me that I'm up 115, which is really cool. Why is that cool? Because there's a long call here already that's been paid for with other people's money. Because if I go back to the positions, there's 10 long calls here that I paid money for, 64 cents a pop, right? So $64 a contract, $640. So I collected enough premiums on, you know, for selling cash secure puts and rolling, sold to cover calls initially, close those out for a profit, and then also the money that I made on selling the shares, right? Because I made a little bit of money there. So bottom line is I'm already net positive on that position, which is pretty exciting. Okay. And I still got an opportunity to buy the 2,000 shares that I sold at 473 or whatever it was, to buy them right here at 450 because I've got 20 cash secure puts at 450. 63 days out. So earnings is going to happen. We're going to get all the good news or bad news. All of it's going to be baked into the cake. And then I can decide if I want to be in Neo at 450 if it tanks. If not, well, then I would just wipe my tears with the rest of that extrinsic value. You know what I mean? Yep. Like I'm okay with it. And then I'll just move on to something else because I'm not interested in Neo over $5. Okay. Like I'm just not. You know, I'm just not. Like I feel like I can make money over here at these levels. If it goes up to other levels, if I don't already have a position, I'm not going to enjoy Neo because there's just the risk reward is not as exciting to me in that $5 and $6 range as it is in that 350 to 450 range. Okay. So that's what's going on with that one. And then this is my pops position. I bought the 500 shares of Riot, and then I immediately sold covered calls at $10 because I bought them for $750. So I was like, he'd make a cool $250, you know, for every 100 shares. It's not bad, right? And then picked up a little bit of money for that. And we're literally just letting it ride. Like, I'm going to keep it very, very simple for him. That way I can show him. I can show him the money without a lot of confusion. You follow me? Then there's SoFi. This one's the one that's not going well at all. I bought the 50 leaps and getting absolutely hammered. A little recovery today, you know, a little bit, but still down 7,600 on those. Luckily, I did sell covered calls at $20, 34 days out, doing pretty well on those. I've considered even lowering that strike price to like 15 to try to bring in more premiums. But I'm not like 100% yet there yet because so if I had some really, really good news fundamentally yesterday and it went
Right.
opposite
Yeah.
that what I thought was going to happen, but then now it's having a pretty good day. So
look, go to the trade table on that.
okay.
Open up that. All right. Now that 3 cent, 3 to 4, that's not doing no good for you, bro.
Yeah. So I could probably go over here and feel comfortable. I know you go way over here, but I ain't gonna do it.
Roll it up to the 15.
Yeah.
Yeah. So click on the bid of the 20.
Yeah. So what I have to do is to roll, guys. You have to click on it. Hold on.
Go back to positions. No, go back to positions. Go ahead and clear that out, though. Clear that first.
Yeah, I got it. Give me a second.
Oh no, you was in the right spot. However you do it. You can right click on it and delete it too.
Hold on.
There you go.
So the way that I do it, like to roll a position for me, what I do is I just go to this actual position right here.
First, unhighlight that other one though.
Yeah. So what I do is, and it sucks. It's 2, but I go here. I right click there, and then I do a quick roll, and then I go to. But it's going to take you to a different.
Yeah, that's why I just put it on close.
Yeah.
When you put it on close, it brings you where you at. Then you can go from there. Because that's going to put you into the 42 day. So close that out. Just start all over. Hit clear. Yeah. Yeah.
So this. Oh shit.
Yeah. Go ahead. Just hit clear real quick.
And then I can delete that. I can delete that.
Right. Yeah, because I normally just hit close and it'll bring me right here, and then I can go to wherever I want to go to. Just hit the X on the 15 call. No, you good with that? You can leave that right there.
Yeah, and then I'll go over here, for instance.
There you go.
So it's saying right here on the bottom, right? You see how it says sell to open the 15 and you're buying to close the 20. Yeah. And then if I hit review and send, it's going to bring in. So this is what's happening here, though. So it'll give me credit, but here's the reason that I was hesitant to do it, because I'd already played with this yesterday. It's because it's going to reduce my buying power significantly. And now the question, because I'm going to clear this order and I'm going to show y'all why. Because this is something that I learned maybe a year and a half ago. It's because my long call is at 20. Money. Yeah. So it's not good business to agree to buy shares at 20 while agreeing to sell them at 15. So just on the surface, it's like, who would do that, right? So your broker's like, we'll let you do it. But here's the thing. If you get in a jam on these covered calls, we need to make sure that you're going to make good. So they're going to charge you the buying power. They're going to essentially make sure that you could deliver these shares that you don't even own yet. And that's why, like on Robinhood, there was a post a gentleman did on X, and he was all pissed off at Robinhood because it wouldn't let him sell covered calls because he had other positions that were already in the money, covered calls that were in the money. But a lot of times your broker is just trying to protect you.
Yes. And then it's nothing but really, I mean, and that's what we always speak about, being able to know how much the width of the spread that you're buying. Yeah. Right. So being that it's really, that width is so tight, that's what's happening. But in the whole thing, what I would do, I would just close that out, bro. I would close that out. I wouldn't hold that.
$141?
Not for no. It's not really. If it start going up, then it's going to hurt you, right?
Yeah.
Not worth it. 3 cents. If you can, and I'm sure if you want to, you can go to the 67 day.
Yeah, that's okay. But then I'm going to be on the other side of earnings and stuff, so I really don't want to. I really don't want to play that. So the one play for me is just to let it ride, or just close it out and wait for a couple more green candles, and then I could do it again at see, but
because I mean, at 3 cents, bro, that just not. I mean, you know.
Excuse me, 1 second. 1 second, option. One second, option. I gotta go.
All right. Let me see here.
All right, brother. We're back. Are you there?
Yeah, I'm here.
So anyway, yeah, I'll attend to that one later. So keeping it moving on TSO, guys, there's 2 cash secured puts for 417. We've got $5 cash secured put. Sign me up all day long. But then there's the $11 cash secured put that's in the money because TSO is trading at 908. So I'll have to deal with that one down the road. So that's what's going on with the portfolio in a nutshell. But what I wanted you to talk about, option, is where'd it go?
Go back over there towards accounts because you had raised it. No,
okay, what I wanted you to talk about is walk the audience through why these numbers are important right here. The one that's highlighted.
Well,
the delta, the theta, the vega, and the extrinsic value.
Well, like, you know, as we know, we understand that, you know, this platform is pretty much put together for if you wanted to manage your portfolio, right? So with certain little metrics that they, you know, have added on. One being your deltas, your beta weighted deltas. Beta weighted deltas is what the deltas that's beta weighted to the spot. Right. And then you have your theta. So between those two, it's like the rule of thumb there is to be within a certain percentage of your net lick, meaning your deltas to your thetas. Now, you can either be long theta. I mean, you can either be long deltas, which right now this is long deltas 186, or you could be short deltas, or you can be delta neutral, right? That just depends on, you know, how one looks at the market and how they choose to navigate that. So if you got positive theta, which is a positive thing, we want positive theta. So that means that what we're taking in a certain amount of dollars a day, right? So you always want your theta to be positive, right? So that's great. And then from a Vega perspective, there's 2 ways, like we know, to play the market. Either you're going to be short Vega or you're going to be long Vega. Right. And that in this particular account is long Vega, meaning you want Vega to expand, increase, right? So you're playing how your portfolio and your positions are set up are you need Vega to increase higher. And then you have what we know as extrinsic value. That's our worth. For me, what I like to do is take a percentage of that extrinsic value. Depends on what your percentage may be. The rule of thumb is you want to be able to take 25% of that extrinsic value. But in this instance, in that case, we notice that that's negative extrinsic value. That's not good because you don't want negative extrinsic value, right? Because how can you take something from a negative? But in a smaller account of that magnitude, then that's what happens. You know, you have to take a little bit more risk, and that risk is those long positions, those long calls that you're buying, you know. So those numbers do come in handy because you always want to make sure that your portfolio is on the right side of the playing field, so you can be placed in a better situation moving forward based off of the movement of the market at that time. So, you know, that's how you pretty much look at it. And like I said, as we look at the other ones, you know, just so we don't have to go back, if you look at the top one, you know, like I said, it depends on one's risk, right? You know, normally what it is they say the rule of thumb is to be between 0.1 to 0.3% of your net lick in regards to the ratio of your deltas to your theta numbers. But that's up to whoever and however one choose to manage that portion. That's something, you know, that's just up to the person. But what I mainly look for to make sure that, you know, your theta numbers is positive. Now, in that instance, you got a negative vega, which is a good position to be in because why? With volatility being up, if you get a contraction in that vega, there you go. You're going to start making money from your vega contraction. So having short vega right now in this position is great. And as you also can see, that's 131,000 and some change of extrinsic value. So from that positive extrinsic value, it's up to the person to determine what percentage of that extrinsic value that you want. That's up to, you know, how one choose to manage their account. But those just the rules of thumb. And why I like Tasty, because it shows you those metrics. And if you want to be delta neutral, you can say, okay, well, I got XY amount of deltas. Maybe I want to tone those deltas down a little bit. Then you go put on some short positions. You see what I'm saying? It's just like a gauge, you know. Okay, well, I'm too short. Well, I need some more extrinsic value, or I want to get some more short vega. You just place positions around in your portfolio to fit the metrics that you look for, and it makes it easier to manage your account. So that's how I look at it.
I love it, brother. I love it. I just got this watch back. I had to send this Cartier because it was running fast. Like I'd used a watch for a few hours and it was like 10 minutes ahead. You know what I mean? I was like, hey, yo, paid a lot of money for this watch. I mean, relatively speaking. And I think that it should tell more accurate time. So anyway, they sent me a David Yurman box though. So it kind of freaked me out. I thought they had sent me the wrong watch, but I guess they just did it for shipping purposes.
Okay.
Anyway, so how do you like this one though? How do you like how this one's set up?
Yeah, like I said, that one sets up pretty well. Now, I mean, your delta theta numbers, but like I said, that's one's individual how they choose. Like I said, my thing is being that you have positive theta, you got short vega because that's you're a premium seller, and especially in these times, and you got positive extrinsic value. I mean, go from there. I mean, it's where it needs to be.
Yeah, absolutely. So the way that these metrics are, guys, that now we're just focused on the larger account. You'll see there the P&L for the day is 298. The P&L year to date is 1.9 because during the 3 weeks that I didn't sell options, the shares went down. That was the drawdown. Right? So that sucks. And then there's the options buying power and the stock buying power. So it's a pretty large account, relatively speaking. So let's just start with it. The way that this is set up here is it shows you the symbol. It shows you the the trade price, the market price right now, the extrinsic value, the P&L for the day, the P&L open, days to expiration, and then all the way to the year to date. The reason the year to date is negative is because Amazon is negative for the year. Right, and we own these shares at 203, and it's currently trading 97. So
Okay.
they're down $52,000 on the actual shares, right? That's what it's showing right there in that highlighted cell. But down a lot more year to date because Amazon was at 230, 240. You know what I mean? And then it came crashing back down. So that's what's going on there. And then I've got all of these shares for sale right here. Got all of these shares for sale at 220 for April the 17th. So the 34-day cycle from here. Picked up $192 a contract, so 19.2. Up 6,100. So here's the thing, option. The tasty trade way is try to go get your 50% and live to fight another day. I don't do that at all with covered calls. Whenever I sell a covered call, since I've had so many covered calls that have caused me stress over the years, whenever I'm winning a covered call, I have to have a very compelling reason to close it out, especially since I'm not comfortable going down in my strike prices. And then secondly, I'm kind of actually okay selling Amazon at 220 because I've been doing a lot of math over the last 3 weeks. And I just feel like I can make a lot more money just selling puts with this money here, as opposed to just waiting for Amazon to get to $300, because I'll make a lot of money if it goes from 200 to 300, right? $1 million or so, whatever it is. But I just feel like that's cool. But this hamburger stand likes premium. This hamburger stand likes cash flow. And I'm not convinced that $300 number is going to happen with Amazon in the next couple of years, because I think that there's a contraction in the economy, in my opinion.
I mean, me personally, where's that 220? Yeah, I will sit there, but even if it come to 220, just roll it to the next expiration. Take in more extrinsic value, let it ride from there. So even if it still go up, at least you have taken in more.
So normally I agree with all of those things, but this is why I don't agree right now. Now, because I only have my 4 horses, right? That y'all see there. It's now, mind you, Neo is a cash account put. SOXL is a cash account put. TSLL is a cash account put. The 4 horsemen at start, right? SoFi, Tesla, Amazon, and Right. It depends on what's going on with the other 4 horsemen, because let's say Amazon goes to 225. There's a world where I would be okay selling those shares if Tesla was trading at, say, 175, because I'd rather put that money into Tesla. I'm going to have a lot more volatility, a lot more premium, and a lot more upside in my mind. I can easily see the double at that point for Tesla, whereas I don't see a double in the next 5 years with Amazon at these levels.
Yeah, I see what you're saying, but I'm saying that's not costing you anything if Amazon goes to 220.
No, it is costing me, because it's $197 times 10,000 shares. So it's 1.9.
So you want to get rid of the shares then?
Yeah, no, that's what I'm saying. Is like, I'm like, where could that $2 million be better utilized? Is what I'm saying. Because if I really believe in Amazon, well, hell, I could just go buy Leaps for a fraction of the money and free up all of this capital, since we're not even using portfolio margin anyway. So it's irrelevant having it on the books. Like if you're using it as a pillar to so that the account trades bigger than it is, then that's a different conversation. But we're not there yet right now. So I'm just saying, dude, if Tesla dips to like 175, all that Amazon money is going to come over here to Tesla, because I'll make a lot more premiums. And I feel like there's a lot more upside with limited downside if we're talking about Tesla at 175, especially Tesla at 150. Like, I think that the absolute bottom for Tesla is 150. I don't know what the bottom could be on Amazon. Probably 150 as well, depending on how bad a correction can get. I don't know. But then it's like, how long is it going to take for Amazon to go? Let's just say they both went to 150. How long is it going to take for Amazon to go from 150 to 250? Whereas Elon Musk, like, he knows how to pump the stock. You know what I mean? Like, the robots are coming, the FSDs coming. I just feel like there's just more immediate verticals with Tesla, but we're all beneficiaries of people like me that are trying to accumulate shares. We're all beneficiaries of a horrible market sentiment. And also, you know, Tesla's pretty overvalued right now, whereas we can argue that Amazon's fairly valued right now. So we'll see. That's what I got going on. Neo is simple, guys. It's just 500 cash secure puts at $4. I don't even look at that position. I'm okay owning those shares at $4. Riot, I have the 150,000 shares here. We're down on the shares substantially, 6 figures on the shares now. There was a time that we're up almost $1 million on these shares. And those are the drawdowns. That's the reason that option doesn't like to own options, right? Or own shares, because he's like, that's crazy. Like he'd rather, you know, manage the deltas and have the exposure a different way versus owning the shares. And those are the gimmies and gotchas of share ownership right there. So I have the 150,000 shares that are getting our ass kicked on. But then I've got 500 cash secure puts at $6. I expect those are going to print. And then I've got 500 covered calls. So 50,000 of these shares are for sale at $10 on April the 17th. And we picked up some pretty decent premiums for those. Those are already paying 27 cents. I only collected 23 cents. If it gets up to like 40 cents, I may sell another 500 contracts at, maybe I won't do it at 10, maybe I do it at 11. Because I want to bring more premiums through the door, because I've got 100,000 shares that are squatters right there. Same thing on SoFi. There's 100,000 shares that are squatters. We got the 150,000 shares doing much better on these shares than on Riot. We got 200 cash secure puts at 10, 500 covered calls at 15. Down a little bit on those covered calls. I just recently sold those this morning. Then SOXL is a trade I put in yesterday. I feel like this is the best cash secure put that I put on for a while. I did 200 cash secure puts at 14, 34 days out. I just did this yesterday, guys, and already up 7,200 on those contracts with 11,800 left of extrinsic value. I'm going to try to milk 75%, and then I'll probably get out of there. But at the same time, I'm not in a hurry, because I would love to own SOXO at $14 if the market gives that to me, because I feel like I could ride those shares up from 14 to 18 in a nice little swing trade, and then the premiums are very, very juicy. And here's Tesla, the 6,500 shares, down a little bit on those shares. Got cash secure puts at 35, so I'm trying to get up to 10,000 shares of Tesla. So I've got them at $200. That trade's going okay. And then I've got all of these shares for sale at 300. And this is one of those that I'm not even going to look at it until it's like 21 days to expiration, and see kind of how it's looking, and see if I want to tweak those strike prices on either end, because I want to milk that premium, because there's a lot of capital tied up here on Tesla. Then TSLL is the new play. This is the one where, again, I feel like this one and the SOXL trades, I could have gone a lot more aggressive, but I chose the conservative route, and I did 500 cash secure puts at $5, picked up 29 cents, kind of hoping that it tanked. I wanted to sell another 500 cash secured puts, but I wanted to get 39 or 40 cents on that batch. So I'm still hoping that it could happen, but it's very unlikely. But I'm going to keep doing these way out of the money at 500 contracts until these contracts actually come under pressure. Then I'll increase the contracts up to 1,000, because the juice is worth the squeeze. And I am trying to play TSLL for a swing trade. I like to get anywhere from $5 to $10 of capital appreciation, but I want to take ownership of the shares on my terms. And if it never presents itself, and if I can just keep collecting $13,000, $14,000 every month or so, I'm okay with that too. Like, I'm not going to force the trade.
One thing to add on, go back to the settings, that reel over there, PJ. I want you to add one more thing to this, the other one.
This one?
Yeah. And go to on the P&L percent change. Just P&L percent open. Find P&L percent open.
Right here. Open change percentage.
Yeah, and roll it up in front of days since open.
Okay.
Yeah.
Okay, now what does that look like?
All right.
Oh, I
So
like that.
that's
Yeah,
going to tell you, you know, where, like, say for instance, if you open up TSLL, oh, it's, well, I mean, it's just telling you that it's up 37%. So
I
if
got
you
it.
wanted to see 75%, you're
Yeah,
automatically.
that's all. Yeah, I just saw it as soon as you put it on. Thank you for that. Because I'm looking for 75%.
Yeah. So I think
Yeah.
something in so far is up 62. You have to open it up though
Yeah.
to see exactly what it is.
Yeah.
So that's a total. That's the
Yeah.
stock up 60. Yeah.
Yeah, the stocks are up, but then on the option, it's going to tell me as well. Like on those cover calls that I sold today, down 12%. On the cash curve puts up 32. This is a great metric, dude. This is something that is very vital. Appreciate you. There was the one, was it? It was on the other account, I think. Let's go back to the other account for a second. This one right here. Because now we have this metric here, and this is what option's saying.
Yeah.
There's no juice in that limit. You're already at 82%.
Now you're just holding risk.
And now you're basically saying, hey, I'm willing to endure some stress potentially, because keep in mind, this is a poor man cover call campaign. I don't own these shares. It's different when you own the shares. It's different because you're like, okay, we'll take the shares here. What shares? I don't own them, right?
No, you don't.
So that's where option makes a very, very valid point, because you're essentially playing with fire. I already won this trade.
It's already done.
For another setup to put it on again, if I'm not willing to just maybe add more time to it, because I don't want to sell under 20, because then it's going to cost me buying power. This account's too small, so I don't have that kind of buying power to just work with. You know what I mean? So how do I close? I just go here. I right click option, close position.
Yep, and hit full.
I'm sorry.
Full. On your right, you see where it say full?
Oh, yeah.
47. Yeah.
Oh, you're closing the full position. Is that what you're saying?
Yep. Ho. Come back to 3. Don't, you know, we always want to try to see if we can get something back. There you go, right there. Now try to close up.
So here it's saying you're just giving back 140 and you're removing your obligation to have to sell these shares that you don't know, right? Essentially is what it's saying. So I send the order and I wait for the little cash register to ring. Whenever you see the little W, that just means that it's working.
Yep.
And I'm gonna let it cook, because I wasn't in a hurry to close them out anyway. So I'm certainly going to give you an extra $1 to do so, right?
And you know what I would do? Hit right click again. Right click right there. Replace that order.
Okay.
Go to where it say cancel. So it'll just stay on, and whenever it get to 3, it'll close out.
Go to cancel. Review and send.
Instead of, because at the end of the day, it'll just close out. But now it'll stay on.
There it is.
Let it work.
Yeah, we're good. We're good. So then,
but now, like, you know, there's no need to. You got 82% of that money. I'm not, you know, nah.
It's awesome though. But I mean, that percentage, dude, that is definitely a metric that I love. That I appreciate you. So anyway, guys, this is the other thing. This is wheel tracker stuff now, right? So we go here to the history, and it shows how much premiums have been collected today. So 8,900. And then if I go here to the year to date, what account am I under? Hold on. Year to date, that's right. Oh, because I have it on Neo. There we go. So you guys will see that I've collected a cool $163,000 in premium so far. And these are all the options right here. Well, that's just for 12. Yeah, it's only 3 days of trading. Holy cow. So these are all the trades for the 12th. And mind you, it's not that busy. It's not that busy. But what happens here is it shows you every lot that was filled. Like if you do 200 contracts, it's going to give you the breakdown of when they fetched those fills for you. That's why it looks a little bit busier. I don't know if there's a way to filter that out to just kind of give me
That's the whole total.
yeah, exactly. So I think it might be under activity. There we go. So it's a little cleaner under activity. You see that right there? Because it just shows you the entire lots. So it's not as busy. So these are the screenshots that I share on the WhatsApp group. And this is the screenshots that I share on the Premium Junkies page for Twitter or X.
Okay.
So it's not really that many trades, guys, for 163 grand. But obviously, this is a much larger account.
Yeah.
And I feel real good about it. And this is a real nice little snapshot because you can see it all, right? It was the symbol, the status, field, the credits, the price, the TIF. I don't know what TIF stands for. Do you know what that is, option?
That's you did it in a day.
Okay.
That's the, time enforced.
Okay.
So it's in that daytime.
Gotcha. And then it shows you the day that you did it. So you're going to see a pattern there that I trade the first part of the day. And then there's really nothing going on in the middle of the day unless I just happen to come back into the office. So there's only 2 times that I trade. I trade in the morning and I trade the market close because those are the highest volatility times of the market. There's a low in the market from like 10 to 2, just generally speaking, if you look at the volume and everything. So I'm like, well, I don't need to be mesmerized. I don't need to be hypnotizing the computer. So this is just a little pro tip for you guys. You don't need, if you're a premium seller, there's more volatility the first hour and the last hour. So it makes sense that that's when you want to place most of your trades. So option, or you obviously you're familiar with that, right?
Yeah, absolutely. I probably don't go in until like definitely around about 10:30. And that's when I kind of move in. I don't move in a little bit earlier because it's so much going on and your fields is so crazy. The bid ask is wide. I kind of lay into the European markets, kind of start slowing down, and then I kind of get in.
Yeah, pick your spots. So you can see, guys, there's a lot of nothing but big trades here. The only smaller ones were Tesla because it's a huge dollar amount. You know what I mean?
Right.
And everything's sold open. Whenever there's buy to close, it's going to show that. And like if I click on this other one, you're going to see here. This is on the smaller account. This is everything, right? But there's going to be sell to open and buy to open because I bought long calls, and then there's buy to close because I bought to close short puts or calls or whatever, right? So it gives it all to you. This is the tracker. This is essentially the tracker without metrics that we've gotten accustomed to. But for all intents and purposes, this is a really good bookkeeping mechanism. And it's clean and it's official because it's from the brokerage.
Let me hit on your trade table or positions. Let me see. And click. You see where the order chain is right there? Say, go right to your, I guess it's your left or right. Again, your left where it say P&L. Click that.
Yeah.
And that kind of shows you like how your positions are, how they stand. You see what I'm saying in regards to like where you at, as you go up. That's when you in positive territory. As you go down, you can start losing money. So see the objective to be able to widen that around that dot, right? And have nothing but green. That standard, you see that standard deviation is right up in the middle. The thing is the more premiums, and for me, visually, it helps, right? Because I'm like, okay, well, maybe I need to get a little bit more shorter positions on to widen that break even out to give me a little bit of room, to maneuver just in case the market falls. I just thought about that one, but just little things like that to look at, man.
Yeah,
I like so much on this, man.
So you see how on this one it's a little bit better, right? A little bit better.
But I mean, if you're a visual person, it'd be like you can be like, okay, well, maybe I need to add on, get some more premium to widen that. Break even a little bit. So if I do get a 5-10% move down, I won't be affected that much. Just little things like that. I mean, it's a lot of little metrics on there that it really helps
it's super cool. But like for instance, this one, guys, the reason that this is tough is because there's so many share zones. So it's tough, you know. It could be no bueno very very quickly. And if I look at the middle account, the $700,000 account, same thing because there's a 33,000 shares of SoFi. Everything else is a cash secured put.
And then a
And
lot of it is your positive extrinsic value as well, right?
yeah,
So because if you click on the next one, you see where when you have negative, see where it's at.
yeah, I'm negative because I bought leaps.
Mm-hmm.
Because I bought leaps, so I'm not running a positive adjusted cost basis here.
Exactly.
You know, that's the bottom line. Whereas over here on these other accounts, you can, let me take this off. You just look at the focus on the extrinsic value, you're going to see that we're premium sellers. Here, we're not really being a premium seller on the smaller account. And that is kind of par for the course on a small account, guys, because whenever you're trying to double a small account, you take calculated risks, gambles, if you will, because you know that you can make a lot more money buying options than selling options. But
you just got to be a little bit more creative.
But you gotta do it responsibly, because whenever you buy an option, it's an eroding asset.
Yep.
Every day is costing you time, theta decay. Then that's a non-negotiable. And as you get closer to expiration, that tail risk becomes more and more prominent, because the data accelerates as you get closer to expiration, just like it does when you're a premium seller. You love it because it feels real good, because every day you're winning money just for it going sideways. Well, it's very painful when you're the premium buyer. You know, when you're the options buyer, it is no bueno. And that's
it's tough, man. And the fact that, you know, when depending on how far you go out, you paying more. You know, and once that goes against you one time, you know, once it goes against you, it's just so much harder to come back. You know, that's why, you know, it's just, I do it, but I look at it as a diagonal spread, and I set it up as a diagonal spread in opposed to just buying, you know, because it can get real ugly, man. It could get real ugly. So
absolutely. Well, let's. I'm going through the comments to see if there's anything that appreciate you guys. See if there's anything that we can answer any questions. Need to learn how to read all of that. Yeah, for sure. Been a little busy. Glad you're able to trade again. Thank you. We are too. We are too. It's been a painful 3 weeks to watch the portfolio go down a couple $1 million, and there ain't shit you can do because your money's hostage.
Sure.
Not cool.
No.
Not cool. You know what I mean? It's whatever. I mean, let's just look at what the reality was. When trying to sell those shares, could have maybe picked up 150,000 in cover call premium.
Correct.
That's it.
Yeah.
So nothing like, oh my God, 2 million. Dude, I was going to be down those because I wasn't going to sell those shares. The only one that I considered selling at like 230 was Amazon during the transition, because now it's just like, oh man, you know, it'd be like half and half, right? Half shares, half money, like that. And I thought about doing that, but I couldn't because, you know, it's Amazon. So here I am. I didn't think Amazon was going to go to 200. I thought worst case Amazon would go to like 215 and be whatever, right? But it's just, you know, you always think the bottom's here and it's way down there. You always think the ceiling's here and it's way up there, right? That's why we sell options, because we don't know.
Yep. No.
I think your swim IV percentile never seems to match up with the tasty IV rank. I'm not sure. Yeah, it's definitely very, very clean. Once you understand it, you slow it down, because initially I've said what the Tasty Trade platform looks very busy, but it's like, dude, all those metrics are so important if you're taking this very seriously. And, or you want something that's easy on the eyes, or do you want something that's functional, that's giving you all of the metrics that you really, really need to excel at your craft? You know, those are decisions.
And it's like everything is right there. So you know the couple things that you want and you look for, and it's like there. Okay.
So the Cartier that I have, guys, is called the Pasha. The Pasha. So there was a guy named Pasha who basically talked to Cartier and said, hey, make me a watch. And this Pasha guy was a ladies' man. So he wanted a watch that he could use. This is a legend, right? I wasn't there. But he wanted a watch that he could like be in the hot tub with and stuff with the ladies. You know what I'm saying? So that's why Cartier made this one, and they discontinue it sometimes, and then they bring it back. So I'd had my eye on it for like 5 years or so, and I finally was willing to pony up 10 grand for it.
Oh yeah.
And then I got another one for my brother-in-law. I got a Breitling Navitimer because he ordered a platinum Daytona for like crazy amount of money. So he was trying to get rid of this watch. So he gave me a $5,000 discount from retail.
Oh, okay.
And it had an extra strap. And I was like, I wouldn't buy that watch, but I'll buy it on a $5,000 discount. And he's only worn it like 4 times.
Okay.
And it's got the extra strap that was like $500.
Yeah.
So I was just like, because I didn't want to add another watch to the collection until we got the portfolio to 20 mil. But then now I was like, okay, well, I already added it. But then I'm like, okay, we'll get to 25 mil. I've always wanted a Daytona.
Okay.
And I'm not really a big watch guy. Like I'm not into all that stuff. But I was like, so now I have the tag, I have the Cartier, I have now the Breitling, and then I have the Rolex. And then if I add another one, it would probably be just like an Omega, like a Speedmaster or whatever.
Okay.
Nothing too crazy. I'm not gonna get a freaking Patek and thinking when I'm worth like 50 million. I just think it's just so ridiculous, dude. Like my father-in-law has like the Patek Philippines and all that stuff, but he's worth probably 10 times more money than I am.
Okay.
So I feel like that makes sense. But like all of these people wearing like $50,000 and $100,000 watches, I'm like, dude, like what are you doing? Like what are you doing? Like go grow your fucking investment account. Like you're being a little bit silly with your money. And I even think like at my level, $10,000 for a watch was a lot for me. But again, that's just my perspective because I always think of like it's like having shares and they ain't gonna give you any premium. And I've heard all the bullshit. Oh, they'll get Rolex, it's gonna go up in value. I was like, bro, it doesn't matter. It's like owning shares that you're not willing to sell. Who gives a shit if it goes up in value?
Yeah.
You're not willing to sell them, right?
Damn right.
And that's the reason that I'm kind of like, I'm trying to condition myself to be more of a wheeler now because, dude, this is the part that I just can't stop thinking about. With this size of an account option, I can bring in almost $500,000 a month and I don't have to worry about owning any damn shares. In 12 months, that's $5-6 million.
Telling you, man.
I'm just saying you're 2 years away from a double and you didn't have to own one damn share. You know what I'm saying? Because I love owning shares, but it also brings a different element of stress. I have to watch that earnings report. Here I'm living cycle to cycle. But it's also a full-time job. So that's why, like, I know I landed on the 4 horsemen, but dude, it might eventually just be 2 stock that I'm actually willing to own shares on. And the rest of it, I'll manufacture my deltas.
I mean, shit, you could think about shit without even doing that. Just go to the spot.
Yeah.
Just wheel the spot.
Yeah.
Think about it. Just wheel the spot by itself. Now that's going to take away everything.
Yeah. You're in everything.
Look, I will aspire
0.0025% of everything.
That'll take away everything, man. I mean, like right now with the SPY being up so, with premium being up so high, go out to the year and sell, something in the spot.
Yeah.
You could probably take in good premiums for that. That's a nice backstop trade. And if the SPY comes down to a certain level, I mean, it's just so much more you can do, man. It's just, without having to own the shares to compensate for, the drawdown.
My wife has one of those guys.
Because the drawdowns is a little bit costly.
Yeah. So best advice on selling covered costs while being down on the shares, try to sell them at least above your average cost. If you cannot, just make sure that you're going to roll and don't mess around with it. Like, as soon as the strike is breached, roll that shit. You know what I mean?
Well, like I said, if you're selling those covered calls, man, sell the strangle around it.
Yeah.
Because that's what it comes down to. And I try to stress it a lot, that the more credit you take in, the more you are now able to adjust that call side. So if you're taking in credit on the put side and you rolling it up as it go up, and you're taking all that value, then what you can do is now restructure that whole position and then move your call down or up, and it gets it closer to, you know, where your the strike price is.
Yeah. So here's a question, right? Why not buy it? Because first of all, it's just not me. Like I it just seems like such a retarded way to spend money. But I didn't grow up with anything, you know, so I always think of like, what's a better use of that money? Like what's a better use of that capital? I could help set my son up. I could make sure that my wife has the house of her dreams. I could, you know, do the things that are just more important to me than having a bunch of cool belongings that you're not going to take with you. And granted, I could leave them around, right? Like heirlooms or whatever, but I'm just not that guy. It's just not my thing. You know, it's not my thing. I have a motorcycle that I rarely ride. That's my thing, you know, and that's, you know, $25,000 bill. I have the car that I don't drive much. That was $100,000. Luckily, I'm leasing that one. So we all have our vices, you know, and I guess this watch is not me. I've never even heard of that watch. Everybody keeps telling me about it. I've never even heard of it. I'm sure it's amazing. There's crazy watches, dude. Floyd Mayweather's got some that are like in the millions of dollars, bro, for a freaking watch. It's just, I just think sometimes people run out of things to spend money on auction.
Oh yeah, definitely. You know that.
I'm just not that bored. Like I don't know. I get more excited about making money than spending money. You know.
Yeah, my thing is I choose not to like buy if I can't, you know, finance it or make money against it. It just don't make sense to me.
Yeah.
You know. But I mean, you know, that's, you know, I guess we all buy things that we probably don't need, but I mean, it just depends on what you want to do, what you want. So
you guys notice the option chain lags on Tasty. I noticed it doesn't fill the option chain quickly. So I don't know, man. I just think that depends on where you're at. Like I deal with stocks that have like real tight bid asks in general.
Yeah,
So I mean, we're going to be arguing over that dollar. You can try to go get that extra dollar, and that's cool. You know, I think that you should try to do that if you're not in a hurry. And that's one thing that I am trying to practice this year is a lot more patience. There's a lot of money sitting on the sidelines.
Mm-hmm.
But option, if I don't get the setup that I'm looking for, kind of like on TSLL, but I really wanted $40 for that trade. So I only got 29. So I'm like, well, I'm going to scale in. And if it doesn't give it to me, well, if I do the trade 3 times or 2 times, it's like I got the $40 that I was looking for. In fact, I would have gotten more, right?
Mm-hmm.
But I'm not going to expose myself, especially on something where you're dealing with NAV erosion and high management fees and all this stuff, because it's a leverage ETF. So I'm not going to be in a hurry to get into a risky asset class.
No.
Like you got to make the deal very appetizing for me to want to put the capital at risk there. It's not, because TSLO is not Tesla.
Yeah.
You know, that's just, it's like a mirror, but it's not Tesla. You know what I mean? And that's the thing. And it's just like, I definitely want to try to go capture more premiums, but at the same time, I'm not just going to sell out of Amazon and be hasty about it when I have freaking SoFi and Riot on the books. You know, the argument could be go buy some damn leaps on those and sell those stocks. And what are you doing? It's Amazon. That's the kind of shit that could be in the portfolio for probably 100 years. You know, like imagine a world, real quickly, everybody exercise. Imagine a world where Amazon doesn't exist. I challenge you. It's such an integral part of a lot of people's lives, you know, and it's also a robotics play as well. Like they're going to use their own versions of Optimus, you know, to at all the factories and stuff. So Amazon's got a lot going on, dude.
Yeah.
They just don't have a lot of premiums going on.
Will you pull up your portfolio real quick?
Which
the trade I was looking at.
Go ahead.
Go to the spot. Like, you know, trade in the market, man. Go into the top account though, because I want to see if they have the portfolio. Your margin might be a little bit different. Now go to trade and put in SPY. That's PY.
Yeah, I'm
and with this,
I'm learning how to navigate option. I'm learning.
Oh, you got it, man. with this IV being so high, man, like that's at 44, which normally this kind of kicks around 10, 9.
Look at this freaking, look at this bronze. Look at this expected. It don't even fit on the page.
Yeah, and it's expanded because with volatility being so high. But look, go to the 300 day. Go to January. And click on the 6. Just go to the 16 delta. Go to the 16 delta. You see on your right hand side delta 16 right there. Go right there. Left sell that. I mean, you talk about a year, you're gonna take in probably $1,000 per contract, and that ain't even counting the contraction of volatility in that. If the market just, we already close to what I'm not gonna say the bottom, but we down, right? So yeah. If you look at the chart, I mean, it's down, and I know it's down. It's but do you foresee it coming to 470? And I mean, you hold that for 6 months, you can lease get.
But you're tying up a lot of money though. Like one that I'd rather do is where am I bullish, right? Like I'm bullish on Tesla. But I also think that Tesla could have a real rough year, and deservedly so. It's overvalued. They're not performing on the automotive metrics. They're not performing, and we're all banking on robotaxi in June and Wednesday. And I'm going to ask you guys. This is a thought-provoking session today. Mm-hmm. When's the last time Elon delivered anything on time? I'm just saying, he's been the CEO for a long time, right? And one thing that he does is he knows how to pump, but he also overpromises and underdelivers a lot. Does he ultimately deliver in a very big way? The answer is absolutely unequivocally yes. But he also doesn't deliver on time. He's not like the mailman, rain or shine, right? He's not that guy. Because I think the things that they're trying to do are very, very difficult. And they probably end up being harder than he imagined them to be. And that's why they never, or they haven't hit their timetables, if you will. But I'd be very interested in this one here, option. Like if I go here, it's trade, right? And if I did that cycle, that 308-day cycle, and remember we had looked at this one previously, kind of in that 180 and maybe even the 175 range. It's a 19 delta. So let's just say 50 contracts. You see how that's real appealing, guys? The buying power is only reduced by $173,000. You're making an agreement to buy Tesla pretty close to the bottom. I know if you look at Wicked Stocks, he says it could go to 150 something. But add the premiums that they're paying you, that's kind of where you're at, right? You're at about a 155, 156 break even there. That's a very compelling trade right there, option to only tie up, or I know you're tying up more theoretically because it's 17,500 times 50. But can you explain why they only reduce your buying power by 173,000 on Tasty Trade versus that just wouldn't be the case on another platform, or specifically Robinhood?
I mean, I don't know exactly how that Robinhood works, but
Me neither. That's a question that I have for them. We're going to talk to them here soon.
That's a percentage. I know they do a percentage.
But I'm just saying, because I'm tempted. How do I do edit? Is it edit?
Yeah,
right here?
edit. Yeah.
Let me hide this thing. Hold on. Because it's real tempting for me to just do this right here. But this is the kind of shit that blows up your account. So hear me out. It's real tempting for me to just do that right there. 200 contracts and go lock in $391,000 and play chicken with the market. But then now I got to go, okay, let's go take a pen to paper and be like, well, how much is that really, right? Because at some point you might have to make good. And this is where it could be, a platform like this can get very dangerous very quickly. So there's $17,500 times 200 contracts. It's $3.5 million. So it turns out it's actually not that irresponsible for me because I can make good and essentially be all in on Tesla at that point if I wanted to. And at 175, bro, I'd be pretty okay being all in. Or obviously, you know that I could roll this thing down to like 150 and play that game. We all know that I can play that game. But let's talk about it in the chat for a second. Can y'all see how in my mind, since I'm so bullish on Tesla, I think that by 2030, this is going to be the largest company in history. And they're willing to pay us a cool $392,000 to work with right now. And I just got to watch Tesla for the next 11, however many months that is, 10 months, 9 months. That's compelling option at 175. I mean, it would probably even be compelling at 165, 155, but I'm more bullish on Tesla. I'm actually more tempted to do it right at 200. So how does that look to you, option? Like, where's your risk tolerance? Because I feel like this is where you and I
At the expected move. With that, I mean, I go to the expected move of 140, 145. It's just because you know the percentage of the drop. You know, like I was saying with the SPY, I got 100-point move, so I got almost like a 20% drop that I won't probably get tested in regards to that. So I mean,
can somebody tell me what
is it like?
What is the percentage? What is the drawdown there? If it's at
30%, that's a 30% drop, ain't it? Something like that.
So 10% would be 25 points. So 20% would be 50 points. So it's about a 22. 23% move. After it's already gone down how much, right? Because this is another, Tasty Trade has charts too, right?
Yeah.
So you look at this thing. I mean,
hold on. Go to where it say 2000. We're up at the top.
Yeah, drop that. What is that?
Might as well set up like that. Ooh, keep going up.
Yeah, what is that?
I don't know. Mine don't look like that.
Yeah, it should say like the month, the hour, the week, right?
Hit the other one right. I don't know why that look like that. Mine don't look like that. That'll either give you a day. All right, go to 20 years. I know, and that should be like day. That's a tick amount. You must be on something else. Click on them bars right there in the middle. Yeah, click on that. Yeah. The hell is all that? You know, I don't know. One thing I can't help you with is this. I don't know nothing about the charts. Click on the settings. Click on that little reel in the middle. To the right. To the right. The reel right there. Layout. Show wicks. I don't know. I don't, one thing I don't play with is the bar. I mean the charts.
No, I hear you, but I don't understand. I've never seen that. This here.
That should be days.
Let me see. It was like that last night.
Let me see.
Yeah, because I was on the charts yesterday.
Let me see. Layout, right? Exit 3, show wicks.
These are indicators. Like I can put like a Bollinger Band and stuff, and that's cool. But this is not giving me. So I can just say clear all, but there are no indicators on here.
I don't know why that's doing that. Let me see if I change this.
Yeah, it's super weird. This is just giving me a daily.
Yeah, I don't know about that one because mine don't show the wicks.
Yeah.
Okay, but I mean, it is down pretty much, but I think I would get a little bit.
I don't think
the reason why I say this is because, like, Tesla IV rank normally is 70, 80, sometime 100. At 60, I'm not comfortable with that. So, I mean, for me, I would have to say, okay, if I know that the SPY is 44 and it's normally around 8 to 10,
yeah,
I had, contraction going to come.
So Tesla is 36% year to date down.
36, okay.
Yeah. So we're basically saying that we wanted to go down 60% in one calendar year, bro. You know what I mean? Like that's I don't buy that. I don't buy that. But that's it's just one that I'm eyeballing. I've eyeballed this one as well to do it, but then It's just another exercise we can do. This one takes a lot more buying power.
Okay.
So you go here, because remember, I've had these backstop trades on TSOL before, right?
Mm-hmm.
So I go over here and I go over here way out of the money, like right here at 543, something like that. So I click that, and then I go, let's just say 1,000 contracts.
You don't know you mess with them joints, bro. that should look scary, man.
Yeah. Oh, wait, let me do 200 because it'll only let me do 200.
Well, at least come to the 210 because that bid axle from 129.
No, but what I'm just trying to show here, guys, is that what I'm trying to show here is how it takes more buying power. See, because I'm only bringing in 32,000 in credits, but it's taking 76.
Yeah.
So Tesla is just better all the way around for this kind of thing.
Yeah, absolutely.
So,
do you still have that SoFi position on with the longer dated put out there? And I think you did it in
that's it now. Right here.
SoFi. Well, okay. It's okay. It's working pretty good.
Yeah, that was a no-brainer trade. I should have done like 500 contracts. I mean, dude, it is buying power. It is like, look, let me add 100 contracts to this thing right here. So you go here, you go trade, just so y'all can see that this is the part that is just crazy to me. And it was when
you on the TSLL.
1 second. Let me click on SoFi. So look at this thing here. This is a part that was just crazy to me. So I go here, I click on that bad boy, right? On the bid. And then I go 100 contracts. Still blows me away that they do this. And look how tight this thing is. Look at that. You're bringing in 16,000 and they only reduce your buying power by dude, I don't even need to talk about it.
Oh,
that's crazy.
Hold on.
Like, dude, that's fucking crazy, bro. SoFi at $10, dude. They just picked up another $200 million in revenue yesterday, but people don't know because they don't know how to read between the lines. I mean, like, what's wrong with people? What's wrong with you,
man?
Mr. Market is crazy, bro. Sometimes they have the Cowboys as 7-point favorites, and I know damn well they're going to lose by 14 points.
Hey, look, you got me with that one, man. I would.
Anyway, so now let's go over here. We go to activity.
Damn.
Oh, Tasty turning me into a different monster.
I thought we was talking.
But look now, if I go to options, picked up 70,000 in premiums on this account here since February 24th. Mm-hmm. This is where everything came over, right? From Robinhood. And then it brought over the 33,000 shares of SoFi as well. So you guys will see there that picked up 15.9, and I had done that trade previously, which I think was right over here. Where was it? Oh, it was this one right here. So I had picked up 16.4 on the first one.
Mm-hmm.
So an average up, if you will. It was just too good. I couldn't resist it. But anyway, man, that's what's going on with Portfolio in a nutshell, guys. I'm really, really liking the platform, really digging everything. But I'm also not like going crazy and doing like a bunch of like naked puts and calls and all this other crazy shit that you can do on the platform, because I'm not trying to blow up any accounts. Like, I'm staying in my lane and doing what I do.
I would see if you let me go back to that SoFi where you bought the 100 at again.
Hold on. That's this one.
And open it up. Let me see.
The one I just did, the trade I just did, right here. This one.
What if you would go to the trade table?
This guy right here?
Yeah. And go back to the 308.
There you go.
Okay. Now I was saying you could have staggered it.
What? To do like a 7?
No, I thought it would have been a little bit closer, but you could have did a 7, but I thought it probably had like the 9 or 8. But yeah, okay. Because you could have staggered that and have a longer, more wider break even. So if it got to 10, you still had the 9. And
excuse me, 1 second option. Hey, baby doll.
That's good work, man.
Okay, baby doll. All right, bye-bye.
Yeah, that's good. That's good.
Anyway, that's it in a nutshell. How do I go this way? There we go. Where is it at here? Right. Appreciate you guys.
A kidney.
Yeah, that's the reality of it. You can't have like a blind bull case. You have to be open to the realities of it, dude. Like, dude, if people don't think that Tesla is overpriced right now, those are the same people that are invested in Palantir. The reason that I sold the Palantir shares is because I just couldn't do it anymore from a valuation perspective. So that's the equivalent of when Tesla gets to like 400 to me.
Okay.
Like with all things being equal right now, and Tesla's at 400, it takes everything. The only reason I haven't sold those shares is because they're usually burdened by a covered call. You know what I mean? Like the covered call has saved me from selling those shares. So it's just one of those things, man. Like to me, again, everybody's got to run their own race, right? I don't tell people what to do.
Absolutely.
I just document my journey, but I like owning shares of stocks as long as the valuation still makes some kind of sense in my mind. Mm-hmm. And I'm willing to overpay for Tesla right now based on the verticals that are in front. But there's I don't want to pay too much. That's why I get excited under 250. I get real excited when there's a 1 in front of it.
When it's a run, yeah.
If you look at like PE ratios and forward PE and everything, that it's crazy. Like I mean, for the Mag 7, it's like they all have like reasonable ratios, and then there's like Tesla. Like, I mean, dude, it's insane. Anyway, man, I got to run. I appreciate you, Option, as always, my man. Thank you so much for helping getting me situated on the platform. Another side note, laundry. I have reached out to Tasty Trades for the Rising Star segment. Okay. And they said that I am a good candidate for that. So if that works out, I'll be flying to Chicago and interviewing with Tom.
Okay.
And then I'll also try to get him on this channel as well.
Definitely. I'm sure
that's the game. Eventually, I would even love to potentially try to become an affiliate for Tasty Trade. As I get more comfortable with the channel and I believe in it, I would love to have a link on there that says, hey, if you sign up here, maybe they'll give me some perks. I don't know, like a cap or something. I can't imagine you can make a living doing anything like that. But I really, really love the platform because it has put my mind at ease from the standpoint of I'm still going to do the tracker. I can't abandon the tracker because metrics. But I don't have like the urgency to go do the tracker after every trade. So it's freed up my mind, if that makes sense. Like it's like the tracker's no longer part of the trade, right? Yeah. Like it's just like something where I can go to the activity sheet, put all that information on the tracker. That way I have my adjusted cost basis at my fingertip. I know my cash secure put collateral because those are metrics that I haven't been able to find on their filters yet. So I'll ask about that because I haven't.
And look, before you go, when you go and look in beside that, it's a CSV sheet, a spreadsheet that you can actually print off too.
Yeah. Yes.
It's right up there by the right hand.
I've already printed some, brother. And I've got a little Canon printer that I stole from my parents' house. My mom was gonna start extreme couponing, dude. And she bought this little Canon printer. I don't have a printer. So I went over there a couple of days ago and my dad's like, hey, can you have Kristen come? Your mom ordered some crap and we're never going to use it. And I saw that it was a printer. And I was like, dude, I've been telling my wife to go get us a printer for like 6 months and we still haven't been able to run that errand. You know what I mean? So I stole the printer, told him I was going to pay him for it. Instead, even paid my pop. I literally stole from my dad, dude. At 50 years old, I stole from my dad. Probably $150.
Yeah, right. But yeah, they give you an Excel sheet with everything in there, then you can copy and move over and do whatever you want to do.
Yeah, that's awesome.
Yeah,
that's awesome. I got to run, man. TJ the Will Deal signing off as always, guys. Stay blue, stock screen. Peace out. God bless you guys.
All right, y'all. See.
Appreciate you, man.